Valentine's Day on Sunday, and I look forward to seeing everyone next week. For those who already hopped in and watched the show, apologies, I recorded it, accidentally deleted it, and now this one's saved. We talked about the best
looks like it's finishing
of
up.
the week, some of the comeback stocks, 3D printing.
Welcome.
Crazy movements in pot stocks this week.
Let's just get a Twitter post now.
Decentralized exchanges seem to be catching the bait. Sushi Swap, Uniswap. There's some interesting projects like the Brave browser. And commodities are still acting kind of funky. And next week I want to do a show on maritime shippers and also on precious metal streaming companies. So thanks a lot, everyone. Have a great weekend and happy that.
Looking at new trade ideas. Okay. Well, welcome back, ladies and gentlemen. Welcome back to another live stream with Quantium Research. You probably have not seen me for a while. There is really no reason other than we've now released Quantium Research's QR Plus product. Wow. If you wonder what that is, check out quantiumresearch.co.uk. But in the meantime, I haven't been able to actually make any trades on the 10K portfolio. So I kind of wasted a month of us potentially making returns or making losses, who knows. But I will give you guys an update. I think there's one trade that I haven't put the video up for, and it was a loss trade. We lost about £200, roughly $260 equivalent. So the portfolio, we started at 10,000. It's now up to about 10,800, I think. Let me check up on my phone. I got to log out of my main account real quick, though. One sec. Hey, Laura Nelizalde. Nelizalde. Welcome. I hope you're doing all right. I assume that there are many new faces here. I hope the old folks that we've also remembered from times ago, I hope everyone's doing all right. There's a lot of hype going on right now. Not just in stocks like GameStop or all that, but actually in new means of social media. Now, at the current point in time, everybody's talking about Clubhouse. I'll be honest with you. I am actually thinking of buying an iPhone straight just because I feel that Clubhouse is such a great thing to be on. But I haven't yet. I was thinking of it. I might actually. But we need to think about Clubhouse in terms of the world of business. It's not just Clubhouse that you cannot buy the shares of, but how can you capitalize off this at the moment? Here's what you do. You check out Agora. These are the guys that literally have a monopoly. Oh, have they exploded today? Goodness me. I was going to analyze them here for a potential trade. Well, this company is doing all right. These guys literally make the underlying, I think it's the app platform. So they basically have a monopoly over the Clubhouse kind of success. Clubhouse is now getting, what, 100 billion valuation? Agora can easily triple, quadruple, who knows, to the charges that they make. Otherwise, Clubhouse goes off the line, assuming their contracts expire. But I guess the market's already starting to take a grip on that. I would have thought Agora might be something I'd look at accumulating some shares in for the long run. But the later we seem to wait, the more unlikely the risk reward seems to be for us. But anyways, there's Agora out there. Let's have a look at YouTube. I haven't actually got the chat up because it's been a while, but I will get to it if anybody's got any cues in the meantime. Let's see. Oh, I forgot. We automatically go live to YouTube as well. Smooth. All right. Well, I've got all those chats up. So we were going to look around the market and just scour for some ideas. I was just watching SChep, aka the King of Trading Views, live stream. Very informative. I liked how he did something similar where he pulled up the screener. I didn't even know that there was certain financials bits. I've never actually clicked this bit. I don't know if you guys can see in the stream. No, above where my mouse is right now, if I extend it, there's a financials bit. Normally that tab's absolutely useless, so I cut it out. But S-Chep had an amazing stream where he used those financials, kind of built some additional bits of information. Like, for example, revenue. We can look at Alibaba's annual revenue, which should be a straight line. Yep, okay. They've got both quarterly, they've got both annually. This is annual of this year, so if we went back, I assume the annual would be, 57 billion? That is slowly rising. But for that size, what an amazing company. Nonetheless, the trend still isn't in our favor. We want it to either revisit lows, little dip to new lows, or break out above this point clearly. This 270 is consult. Whilst the risk reward isn't huge, we'll be holding that for probably 6 to 12 months because it's more an investment quality company. Who could say no to a quality company? Oh, I've got Zoom stuffs. Yo, Elsing, what's up, man? Wait, is this Latch? I think this might be a user. I haven't done a live stream in ages. I've just been super busy with work. We've been building some stuff for the site as well. Quantium Research Limited is officially a limited company, so yeah, Google us just in case. Limited liability. But yeah, we've released QR Plus, and now I thought I'd look through some trade ideas because I haven't actually made a trade beyond one that you guys haven't seen. I think we had a stream, I just haven't uploaded the video yet. It was for Fubo TV. We didn't make on the 10k PF. We lost about 200 or so. We're at 10.8k or so. In fact, I think it's £10,860 for the 10k portfolio challenge. And that's not too great, but it's fine. I had a plan to go long energy heavily. Oil is now going through the roof, $62 for Brent, 28 cents. Enquist was the trade, and we wanted them at about 12.50, and we just didn't get it. We were getting really arrogant with it. And the day I don't have time to look at it, I say I'm not going to set an order or anything. Then the shares are at 14, so we've already given up a good 10-15% that we could have had. There's no point chasing it, but if I can get any pullbacks on this healthy break, then yeah, maybe I'll be interested. There are a couple of other names actually about. Oh, so our account size, £10,860. That is the 10k portfolio challenge. It's been quite a while though, a month where we've just done nothing. I needed to make sure I didn't just trade for the sake of it, so I decided to take a couple weeks where I just focused elsewhere. Nonetheless, we're back, and I hope everybody is doing totally all good. It's President's Day tomorrow. Ooh, US market just closed. It's President's Day on Monday. That's why the US market is closed this coming Monday after the weekend. Seems Agora closes strong. Nice wedge, clear breakout. Really everything's healthy there except for a little gap here that probably gets filled on the way down. So you have like 40% risk if it runs out of steam. And they don't overcharge Clubhouse. Clubhouse could go under if they overcharge them. Do they get good business rep? I don't know. It's kind of a trade-off. You don't know who's going to win in that battle. But anyways, I've also been looking elsewhere on the ETF market. We can use some of that data once we get settled in. It depends if folks are going to be around tonight because we haven't actually streamed in a month, and we have a very irregular set of streams because it's just difficult to be around at the same time every day. But I had a list of things I was going to look at. Oh, before we do that, let's just screen through some of these tools here. That might be quite useful. Normally this is not how I'd screen, but it does look quite cool now that you can have all sorts, both fundamental and technical data. Also the nominal return figures. That's quite cool. For anybody who's new to the stream or has returned, I hope everybody's doing okay. I'm Ryan. Am I on Clubhouse? In fact, Elsing Jr., I'm not even going to lie to you. I was about to buy an iPhone tonight, an iPhone 11. I think they were about £700, about $1,000. I was about to buy it just for the sake of Clubhouse. I got a couple of friends who are quite big on there, and they've been saying, look, man, you got to get on, you got to get on. And I think I will. I'm just going to give it a couple of weeks to make sure I know what version, whether I want to pay a little bit more, pay a little bit less, just get a device that has iOS. I don't know. You buy a second-hand thing, it just breaks, and then you don't know what to do with it. The likelihood of that breaking is much higher than something you buy where you have a warranty on it. It works on iPad. Yeah, but I want it to be smooth. I want to be able to be at it every minute kind of thing. You know, if I get a notification or whatever, hey, hop on, do this, because I'm going to take it seriously. It's quite a nice platform. I really like the concept. I've always wanted to be involved in something like this. And some of my friends who hosted the other day a room where Vlad Tenev, co-CEO of Robinhood, actually came on into their group kind of room and spoke for a good amount of time, which was super cool. I think it's an opportunity we can't miss to be surrounded by people that are passionate about the same areas. I think it's great. So, yeah, I've been working on some stuff behind the scenes. That's why it looks like I've just disappeared right now. But we all good. We all good. I hope everyone's doing okay. Elsing Jr., I hope you're doing good. Laura Nelizalde, I hope you're doing okay. You sent me a swing trade chart. Well, that looks like it's in a breakout. That's for sure. You like that slow kind of consolidation, way up, fill a little gap. Very healthy. Very healthy. Very healthy indeed. I don't know if we're going to be streaming so regularly, make so many lines, you almost don't see the important candles. Oh yeah, if you're looking at my screen right now, don't worry. I'm actually more interested in the bottom section. You almost don't see the important. This isn't actually a bad idea. If you look at it, hold up, let's hide it. Really, it's not that serious. And we regularly rotate heavy quants. Yeah. There's not really many lines going on. These are just trying to gauge trend channel worst case scenarios, which we were actually quite off with Baba. Hence we never got the entry. But nice to meet you, Vitali. Hope you're doing okay. I think you're a new name round here. Hope everything's all right where you're at. Elsing Jr. says Clubhouse is a live podcast. It's amazing. Yeah, it's real cool. I think I've had some conversations with people outside of Clubhouse who use it a lot, and they tell me it's amazing. So I've definitely considered the opportunity to hop on. I mean, they said, yo, come on. I'm thinking, do I switch from Android to iOS? I probably will. I think I will. It's just dumb though. Why are you going to buy an iPhone for £600-700 when you already got a perfectly functioning mobile? You know, it's just, I don't know. But it is something that I think we should all hop onto. I wouldn't recommend doing that though. Do what you want to do. Nonetheless. Ooh, somebody said, why does Fubo say that? Oh, that's an old thing. Don't worry about that. Yeah, so I want to look back at this little stock screener element. I hope it hasn't gone away. No, it hasn't. Okay. I want to kind of flip through some of these companies real quick. Because I just haven't been observing the market as much as I normally would. So it's good to kind of just get that warm feeling. 3 indicators, I'll show you mine. 3 indicators. That's, it depends what works for you. If you want something that has a lot of lines, if it works, it works. How do you send a chart here? I'm not sure. But you can always send a link, I'm pretty sure. What about XRP? Ripple. I don't know. I don't follow Ripple. I think bonds are bearish. Do you? Generally, going into this cycle, or should we say this stage of the market cycle, bonds are almost always bearish, or at least equities are outperforming such things. And listen, I help you. Vitali, appreciate the offer of help, but I must decline. I think bonds are bearish. You know what? Bonds are the only way you can really make serious money when you're seeing markets fall. You know, pre-COVID, during the beginning of the COVID kind of crash, that's when you'd have gone long, large amount in bonds, maybe 70%, something like that, 75%, and then the rest into equities. Then rotate that aggressiveness. It's just your timing's very important. Bonds, we've got an ETF though that we can look into. It's called HYG, I'm pretty sure. Yeah, fixed income, HYG. This is high yield corporate debt. That seems to be doing well though. When you're buying bonds, you're not buying one type. There are many different types. So you've got government bonds. This ETF, GovD, is represented by, well, it's made up of US treasuries. Look at this. Did you just send me a super trend? Great for crypto. Anyways, shouldn't be having my Bloomberg stuff up here. Yeah, diversification. Yeah, look at that. US Treasury is probably the worst kind of ETF representation of bonds to be involved. Afshan Bahrami, MDT. I'm assuming that is a US company. Yep. Okay. Let's see. Medtronic. Well, whatever it is, it's in a healthy uptrend. Only thing here, a little bit of divergence probably suggests the trend is running out of steam. So you need to really match on a 60 RSI, if not 61 and above, and new highs, which it actually hasn't made yet. Yeah, you need above, what is it? 1987, 1988. Yeah, you need above 120 clearly, and that's long. Otherwise, it's probably running out of steam, and it will start targeting that 200-day moving average. So if it can't break above 120 ASAP, or even blows off the top, it's straight down to that point. If we could see gap fill in 105, 104, makes sense. Oh, is MDT a crypto thingy? MDT US dollar. Not too familiar. It just looks like your casual pump. If it can fall below 0.0458, then it's targeting 0.035. Otherwise, let that chop break, then go long. Clarity. For government bonds, we were just looking at, yeah, clearly with global interest rates being chopped to literally nothingness, either it's going negative or it's going to stick around zero. So US government bonds are just going to be worthless. Look at this. Oof. People are shifting funds out of equities, out of bonds, and into equities. And this is an example of the bonds being sold off. Look at that. Decline from beginning of 2021, which is here. There we go. End of December 2020. 31st of December 2020. Look at that. Decline further. Continuous decline. Where was bonds exactly? During the whole COVID crisis when things were ugly, look at the returns you'd get. Even on US Treasury bonds. That's an ETF that represents that. Amazing. Absolutely amazing. Now it's back to that long-term downtrend. We've got intermediate term Treasury bonds. These are 7 to 10 year bonds. This is an ETF where you can literally buy exposure. That's back in a downtrend. Everything's moving down in that respect. Total bond market as a whole not doing too well. Corporate bonds doing great because these are being guaranteed by local governments. So the US government is buying the heck out of these bonds, these corporate bonds rather, so that those company shares are also increasing because their debt is secured. If someone wants to buy the debt, in this case the government, then people are like, okay, the shares are going to go up. They are. They're safe. Their bonds won't default because the government's guaranteeing them, buying them up. And with high yield debt, normally you get companies that aren't that great. If their bonds are being guaranteed, look how amazing that is. Let's see what's going on here. I wonder what everybody is trading right now. Is everyone just involved in crypto? Coming from a background in equities, I'm not really too familiar. So whilst I can look at charts, you guys probably know more than me in that respect. Look at this. Look at this list we've made. All of it just with respect to bonds. Literally. You want bond exposure? Don't just buy the first thing you see. Go deeper. Do you want short term, medium term, long term, investment grade? Which seems to be a little bit of an anomaly. I assume it's made up of mostly government bonds. No. First leg down, first leg up. This probably has good stuff, but it has everything else that makes it an average performing investment. Total bonds. Treasury inflation protected securities. That's quite an easy win in times of inflation, especially with heavy QE that's going on. Look at that. You get 108 and then 120s highs. This is normally something that would yield you about 3 to 4% a year on average. But that 3 to 4%, if you're catching in on the drawdowns, you're making 4-5 years of returns in a short period of time. You can still hold and probably make money because these are Treasury inflation protected securities. Do you put money in your bank account or do you put money in tips? Likely, tips is the smartest way about. Literally about the same risk. Crypto's for noobs. I mean, it's wherever you can make money. No disrespect. It's not my area, so whilst I have my opinions, I have comments I can make, I don't think they're constructive, so I shall leave to learn as much as I can from the folks who do know more than I do, which most in the crypto world happen to do so. Ooh. Been writing some cool stuff. Also, this is probably time to plug some Quantium Research free content out there. Look at that. Wow, look at that. Beautiful new website. QR Plus, we've just released QR Plus. Very nice. But the articles, that's what's important. We've got new stuff that's just been released. We're releasing new content. Now you see this? Salesforce, written by Alim. Great stuff. New member of the Quantium Research team. Love this article. Love a nice bit of imagery too. We've got the old stuff out there too. The new video section, you can see some of the TA videos. Look at this. Candlestick patterns. This has probably got the Japanese candlestick stuff. Yes, introductions to candlestick. This is a completely different one, but look at that. I walk you through TA, all free stuff, but trading content from traders, not from folks that just started yesterday with GameStop. Look at this, QR Plus. Look how smooth. Ooh, a monthly subscription to QR Plus. Don't mind if I do. Sounds good. Look how smooth everything is. Absolutely beautiful. Shout out to the Quantum Research team. Big respect. And the podcasts. We had one that came out recently where we talked about GameStop. Very smooth. Oh, why is that not working? I think that's the host themselves. Maybe a little refresh. Unless, yeah, okay. Options, short squeezes, gamma squeezes. Ever heard of those things? Well, I walk you through them in a little 20-minute podcast. What happened with AMC Theaters and GameStop. I called exactly what happened. The crash. You get to a point where people don't have any money left. They're still buying. They're trying to sell their sofa to buy. And then boom, the big guys are getting out in the meantime. Don't get yourself caught out. That's a very, very irresponsible idea. Good marketing, XD. Yeah, appreciate you. Nah, most of the stuff on the site is free. So if you're not one of those people where you trade actively and you want to make an investment in reports, QR Plus, look at that. Look at that beautiful thing. Oh, the reports that we release, that's totally fine. That's up to you. We've got ones on crypto for the crypto folks, ones on foreign exchange for the foreign exchange folks, and one's on indexes for folks that like to trade in indices, futures, all that stuff. And the stock sign, catch these streams. These streams are all out there. Your boy's just chatting about it. But anyways, for those people who are new, our streams are dedicated to documenting a £10,000 portfolio. I put £10,000 of my own money into my brokerage account, a separate brokerage account from everything else. And I only trade that on live stream. I record the videos, I put them on our YouTube. Our YouTube's at Quantum Research. Some of you are watching us from YouTube right now. Others are on TradingView. But we're at about £10,860. I haven't really done anything for a month because we've been working on the Quantum Research site. Look at that. Everything is now sorted. It all works. It's beautiful. The video archive, 20 plus free videos just out there. Look at that. I'm not even logged in. Look at that. Absolutely beautiful. All the essentials, 10 videos, everything you need to know about technical analysis. All of these videos with real examples straight from our beautiful provider of charts, tradingview.com. Look at this. Boom. Overbought, oversold analysis. Is this divergence? Yeah. Divergence, the pound against the dollar, all sorts of asset classes. It's absolutely amazing. But anyways, we're going to flip through some companies real quick. We're done with bond ETFs. I want to just update myself because normally before I get back into trading mode, I like to see what's going on in the market, especially with respect to local stocks, even though it doesn't matter whether it's a US stock or a UK stock, we'll trade whatever. But I do like these US stocks these days. But in the meantime, we're focusing here in the UK. Let's put that up. Okay. All right. Nothing in the chat. It seems. Why is this so wide? Okay. Cineworld is that quote-unquote short squeeze stock that everybody's talking about. It's trying to break out. But the irony is, it's an illiquid company. If I can probably plot the market cap, that might be quite helpful. Yes. Wonderful. What? No, that's wrong. Why is that saying billion? You got to divide everything by 1,000. So it's actually, no, 100. So in this case, 330 million. That makes more sense. I don't know what's wrong with this indicator. There's probably a mistake with the share count. A couple zeros the wrong way. But yeah, 480 million. That doesn't make sense at all. Yeah, this is a faulty indicator. This is why I don't use these. I use Bloomberg instead. Bloomberg terminal stuff. But I remember these days of them in the 20s. They didn't even look like they were going to survive. And then just... wow. Whilst I wasn't going short, it was quite a dumb idea to have not gone long, at least early on. But they've always been in a phase where they don't have probably 2 weeks at best left to survive. But that 2 weeks has now become 2.5 months. So what am I to call any predictions on those guys? Who am I, rather? The S&P 500 closed at all-time highs. Wow, very crazy. There's a Twitter Spaces thing. Very interesting. How do you get on Twitter Spaces? They've literally copied Clubhouse. I don't get this. How do I get on Twitter Spaces? That's very odd. Very odd. Twitter Spaces is really just cheating. I think it will work real well there. Alright, flipping through. I'm going to put this chart on this screen. I'm not going to look at chat for a while. Oh, that was AMD versus Intel. Nice one. We're going to now search HYVE. Market cap 300. Does it fit the criterion? No, it doesn't. The CPI does. Weird. What the is going on here? Computer. There seems to be little hope. Tries to consolidate. Little hammer off there as well. I don't exactly know what's going on. Oh, it's a heavy wall. Not too interested for that risk. Boeing. These guys must have done really well. Why are they at $200 a share? I thought they were at about 100. What have I missed? 150 rather. Yeah, that's what I missed. That's messy. Doubled in like a week. Carnival. This is one stock where it was a pumper on the vaccine. That's why we were long, waiting for vaccine rumors, which eventually became the news. But will the business ever recover? It did a bond raise. Not too bad. Don't see so much momentum here either. Nothing special. Choppy stocks, it's better to stay out of them. You don't have to be right when you're investing or trading. You know, this would be more a trade. It's more important to be on the right side of the trend. Oil and gas services, Lamprell. What is going on here? 260 million market cap. They went from the edge of death to probably where they were before. Where were they pre-COVID? You're paying a 10% premium on top. What has this business done to attain such? And trend is probably running out of steam. Casual stuff. Not interested in TLRY. Jet 2. I don't like the way the management the other day did that. They made a mistake on 250,000 shares being 16,000 that they bought up. I think that's misleading. So whenever there's a red flag even that close, I don't even want to look at it, man. I don't even want to breathe the same air that company. No, I'm just playing. Okay. Next one. It's good to recap this stuff because some of these stocks I didn't even realize. Lamprell was in the 30s last time I looked at it. And my scanner hasn't brought it up. The one I use externally. This is just a cool trading view feature that I don't generally use. But I like the look of it. It's cool to experiment with. Marston's. Aren't they a pub? I'm pretty sure. Marston's. Yeah. No gaps. New range. 100, 110. Hit though 105. It's essentially lower highs. And the rejection's just ugly there too. Not great. Tullow. What has Tullow done given oil prices right now? They need much higher oil prices. But their issues are beyond low oil prices. Let's see. $26. So it probably will be breaking, but all at 35. Nothing special. I want to look back at Enquest for a second. Wrong listing. Enquest. That's just so nice. But I happen to be away from my desk for a good week working on some other stuff. Shame. And I think it's going there, that 1570, 1664. Enquist is on its way straight up. I mean, oil at $62. Oil above 50, in my opinion, has them at least 20s long term. They acquired more production. They're doing what Premier Oil did, but just got really unlucky with super high debt. These guys are in a better position. I never thought Enquist would be better, but it seems that they are. And I will say that now as an opinion. Let's see. On notification. What's that notification? Novi just followed us. Thank you, Novi. Appreciate you. And Amadurawala 044. Thank you. And a cult leader. We appreciate you. Welcome, everybody. We're just flipping through a couple of stocks, mostly on the UK's market. We were looking at the US ones earlier and the ETFs. Long day of other stuff today, but we haven't done a stream in like a month, and we probably only place one trade in a month. If you guys haven't followed the streams, what we normally do is favor lower frequencies of our trades, but when we hit it, we hit it. And if we're wrong, we're out quick. So our average winners were, I think, something like 5 days. That was the stats of us holding them. And our average losers were about 6 hours. I think our last trade brings it down, because our last trade was like, what, 20 minutes or something? That will be out. But we're down to £10,860. So we're still up 8.6% for the account. But at least we can show that, you know, trading, this is how it's really like. Yes, you have access to leverage, but you don't use more than your account. Otherwise, unless you're a professional trader, then that's very dangerous. You're going to blow up one way or another, getting too ahead of yourself. Don't do that. Don't do that. Instead, trade responsibly. You don't have to be in the market every single day trading, but it's likely that you'll be in researching, looking for new ideas. Every minute you have will probably be dedicated to things like that. But let's see. What else is there? On the Beach Group, this one's a weird one. Comes up in my screen as a lot, but I have no idea why. I really just don't like the industry right now. Long term, this is not one of the ones I'd like to have chosen. Yeah. Really. I can't see why. Except for that, this point being kind of like a magnet. Down to the 260s. Back up, down, again. That's kind of what my expectation would be. It's not a point where you short, because it's kind of due a bounce, so I assume. Exhaust it, bounce, normalize, then drift. Not worth the time. And after that bounce, going short on a hope of a normalization, then it drifts. It's just really low probability. And the risk is way higher. Actually, it depends. Would I revisit? Yeah, I'll add. You know what? I'll look further, but I will add them to the day trades watch list. OTB. Wonder what the spreads are. Let's have a look. 45 minutes. We can gauge spreads here. Let's just say 302, 295. Probably about 2%. 303. Two pennies either way. Yeah. Not a short candidate right now, that's for sure. NEX, another important company we were looking at, which we rightly so didn't go short. We didn't want to go long because the fundamental picture didn't say so, but it had really strong technicals on this break, and rightly so. I think, where was the point where I was gonna short? I think, oh yeah, when I was looking into the fundamental picture, it was around this breakout, and we weren't shorting. We could have gone long, but we didn't, and it's now just gone crazy for no reason. It's still oddly bullish. I mean, the fact that it held above this point here, 277, very important. It's kind of like a secondary uptrend that is still being maintained. You normally don't see that with a company that is operating under pandemic conditions. But what is a pandemic? Stocks to the moon, eh? Anyways, there's those guys. So, where do I think they're going next? There is some form of magnetism, I reckon, towards 215, 230, thereabouts. But does it continue for a while? Probably so. Eventually, you need the fundamentals to be in a weak position. They got enough cash. They could raise, but they've got enough cash. So there's not really any problem. In my opinion, no interest either way. But I'll still keep them in my list because I really like them in a 4 or 5 years post-recession kind of basis. But they've already bounced more than what I was willing to pay for them. So I don't want that. Another one. This is a scale of sensitivity. Hammerson's worth just under $1 billion. Aren't they building? They build some stuff, right? Wow, 21 pence. Where were they before? These guys, wow. Well, COVID really hasn't done them well. I'm assuming they've fallen way before COVID, yeah. What has been going on? It's just a bad business, I'm assuming. 2020, 29 bucks. All of a sudden, they're at a little bit of a discount. They were lower pre-COVID. What does this business do? I know they're in property. Platham 007 followed. Thank you so much. I hope you're having a wonderful day, and thank you for coming through. Hammerson. Oh, what am I talking about? I'm going to put Bloomberg on the other screen, and I'm going to log in and save myself the effort. Because you must get what you pay for. Okay. I moved to Signal. Oh, smooth. What the hell? Okay. That's crazy. Just gonna have a look. This is an ETF prospectus for an IT ETF. That means nothing special right now. Alright, what's my code? To log into Bloomberg. And we are launched. Obviously, I can't share that information on live because it breaks the agreement you have when you sign up with Bloomberg, but at least we can interpret some information within fair use. Figure out what these guys do because I've heard of them so many times. I'm pretty sure I looked into them before. I just can't seem to... Oh, battery's low. Let's plug this in. Alright. Why am I... To get rid of some tabs. Yep. And that. Okay. I hope this stream is running smoothly. If there are any problems, please let me know. But it looks good by the numbers I got here in front of me. HMSO, Hammerson, London Equity. Let's see. So as far as I'm aware, they develop property. That's a good business, right? I want to go further. I'm going to their investor relations. What is the problem? Curious. I'll obviously do deeper number analysis, numerical analysis later, but I kind of want to see what's been going on. 2020 half-year results hit here. What? 3 pence? What? What a... Why have they... What was that? Oh, stock split. How unfortunate. So, They did what you normally shouldn't be doing. They did a 1 to 5 reverse instead of shares and more. Wow. So really, if we divide them by 5, is that 219 or 20? I think it says here 1.5. So if you divide, what's the exact price? 21.21 by 5, you get 4.24. So Hammerson is doing horribly. They must have been huge before. 5 times that market cap would have been 4 billion. No, 5 billion, almost 6. Wow. Whew. Let's see. Rights issue to raise 551 million with Lighthouse Capital, 26%. Let me use my functions to my advantage. Let's see exactly how much Lighthouse own, because we can track their TR1s. Largest shareholder, Lighthouse Capital, straight 20%. APG Asset Management, 20.83%. Anyone changing as of recent? Nomura just bought 6 million shares. 7 million shares is 25 pence a pop. Let's get it. Saves the pressure. It's £1.75 million. Nothing for those guys. A couple guys took part about a day ago. Just took huge buys. State Street, BlackRock, OM Residual, Invesco. They're all buying like crazy. I don't understand what the occasion is. Ah, that could be... I'm going to double check. This could be ETF allocation. No. Multiple portfolios. Yes, it's just simply allocations. Okay. Yeah. MSCI Europe. State Street funds. Yeah, well, that's nothing special. There's another one. A pension fund. Total stock market index. I see. So they're only buying more of this because it's representative of the sector. So this would have been dead if it didn't have this sort of exposure. I wonder how badly the company must be doing. Rights issue 550 million. There's no numbers. 6 months. Adjusted profit 17 million. Anything missing? Portfolio value down 800 million. That's really unfortunate. Profits down 84%. But they're still making money. Well, let's see. Let's see. It's so freezing here. The boiler's not been working. Hammersmith. Hammerson, not Hammersmith. Hammersmith's in London. Loan to value. They've got a lot of loans out. Equity holders. But what's the problem? Earnings. What were they? 30th of June 2019. Wait, when they were stock split, it closed at 4.11. After the raise, they were 26. So 4.11. What was that? So they actually rose 30% on the day of the rights issue and actually fell by about 30% versus pre-rights issue. So the pre-rights issue level of the norm is about 20.55. So they're about there right now. Almost clear that it's going to try. That's very sad. Very sad to see Hammerson doing so badly. Let's see any other top holders. Morgan Stanley. Vanguard Group, obviously. me have a look. On the league tables, where are these guys? HMSO. I want to see if they're on the brink of being kicked out. That for me is very interesting. Automatic exit point. Let's see. They're not in the FTSE 100. Let me check the data I should be getting here. They are. Where is this information? Can't seem to find it. Issue index. As a real estate investment trust. What real estate investment trust does so poorly? Okay. That's time to cook dinner. There's a lot I'm probably going to flip through on my own and not bore you guys, and instead come back with some interesting ideas. But I've got a huge list of things to work through. I hope everybody has a wonderful day. I've got to go and make sure I get enough time to cook dinner. I'm going to be in and out, so there's no point streaming there. I can see people have dumped out of HMSO. Yeah, that's very odd. If I can see the next point. Exit is... So they'll get kicked out of the FTSE 250 if they lose 260 million of value. 260 million over 600 roughly is... Oh, well, why have I even thought about it? 260 million over 860 million. That's what I'm doing wrong. 30%. They need to lose 30%. And then they're kicked out of the FTSE. So here, 15. What's the change to that point? I reckon they'd test 14, let's say. 21.21. Minus. It all kind of comes to place there. Over original 33%. So if they test this point of support, they get eliminated from the FTSE 250. That means that it's going to basically zero with the relation of float that we're looking at right now. Damn, that's scary. I mean, if anything, I'd like to short there, but there's far too much risk. There's not really even any reward. It probably, I don't know, go back to 3 pennies. But if it does, that's at a fifth of the market cap of what it was here. So, jeez. Not good management. I haven't even looked into these guys too deeply, but I'm already scared to look further. Oh, I didn't realize there are so many people here. I hope everyone's doing okay. We are diving in to some companies, some trade ideas. We were going to head off, but I just want to finish this off real quick. I could see HMSO. It could be worth if you're bearish on the sector, which I think it's difficult to be. It just matters what their business involves right now, which I'm going to look at now. Let's pull up. They have to be in like physical retail. That's the only thing. Oh. Let's get 2020 related. There's only really the full year results for 2019. At least I can roughly gauge what they're doing without having to spend too much time looking deeper. Debt reduction. Pro forma debt of £2.4 billion. Okay, welcome, Carillion. Wow, £2.4 billion. That is 3x the current market cap. Oh, knew there had to be something wrong. I want to know that debt servicing cost, because that is also something they love to hide at these companies. Get away. I don't want to see your income statement. I just want to see the truth. How much does it cost to borrow all that money? Wow. I'm looking for 2021. I want to look 2020. So many waffly RNSs. Change of hands, scrip dividend, scrip ratio, interim dividend, AGM voting, rent collection rate disposal, chief executive appointment, move. Okay, the rights issue. This might be interesting. Is this the old form? It is the old form. The announcement is what I'm going to find real quick. Wow. I think it's a capital reorganization. Average share price. No. That's something else. Let's see. What a company though. 2.4 billion in debt. Worth a third of that is the proposed rights issue. Let's see. And the sale of 50% in VIA to APG. The guys who own 20% in them, they sold. Wait, is that APG? Yes, it is APG. They sold 50% of their interest in VIA outlets. I don't know what that is, but I shall find out right now. VIA outlets. Property investment partnership. Investment and retail experts. Let's see what that portfolio includes. Premium fashion brands. Prague, they've got. Where's the London one? Is there no? It's mostly in Europe. Amsterdam, Prague, Lisbon, Palma, Zurich, Gothenburg, Oslo, Seville, Porto. And they're all fashion places. So without the stores opened, especially those shopping centres that are empty all across the nation, and in fact, across many European countries too. You have no money coming in. Who can pay the rents? They all leave. It becomes a ghost town. They got a little bit of cash and they raised 825 million. When you sell half of a big part of your business, that's just dumb. You know, a business worth almost $1 billion sells about 300 million, 274 million. That's a quarter of market cap. That's them stepping back, realizing this is our final option. You don't normally sell a large portion unless you're doing what Associated British Foods did. I think they were the ones that owned Costa, if I'm not mistaken. They sold it to Coca-Cola, a big brand, at a good price, and in fact they had cash that they could use on future growth. With these guys, it's scary. Aydin Parsa, nice to meet you. Welcome to the stream. We're just looking deep into a company called Hammerson, and it doesn't look too pretty. Leasing model, ugh, don't even tell me about this. They want to reduce their leverage and increase liquidity. That is so not what you do when you're in a tough position. You don't sell off everything you have and just reduce your risk, because you're going to be losing more. You're going to have to reduce that risk that's now dripping away at your investor funds. Not a fan at all. Net debt down to only 2.2 billion. Wow. Rights issue. Net debt and loan to value. Net debt will go to 2.5 billion. Why is it? Let's see. They're going to use 794 million to reduce the debt to net debt would fall to 2.5 billion. That, to me, as far as I'm aware from the last statement I saw, the half-year earnings, shows that these guys have lost more money. And that's why the debt is now 2.5 billion. This is an issue of short-term debt versus long-term debt. When they pay it off, they all of a sudden declare everything. They say, we're paying off everything. Total net debt will be 2.5 billion. How would net debt be 2.2 billion, 30th of June 2020, And then as of this completion, net debt will be 2.5 billion. What? That doesn't make sense. That rights issue seemed out of desperation. You should have raised double your market cap if you're about to be on the point of death. They kind of made it look obvious that they didn't really have the ability to raise more. 2,400% of their shares. Well, forgive me. Not double the market cap. Then that means they were worth much lower now. Then really, if anything, they're weighted towards the short side. Yeah, wow. That is crazy, absolutely crazy. I don't know what the regulations are for being able to list more shares. Do you get promoted to FTSE 250 or something like that? I don't know what their index is, but I'm assuming they're FTSE 250 right now. In fact, does it say anything at the top? It doesn't. I'll show 5 pence for every share of 25. So really a 1 to 5. Okay. Disposal VTA. Let's see that. They only had 50% interest. What else did they own? That's a question. Our portfolio. Hammerson, do you have anything about that? Management strategy. Nothing. I got a PowerPoint I can look through. 12 retail parks have been sold. They're selling everything they can. I assume that 12 retail parks is that thing they just sold now. Annual disposal proceeds. It seems like every year they were just selling a little bit. In 2016 they sold, of their retail parks, £200 million worth. In 2017 they sold £100 million worth also. £200 million worth in 2018. In 2019, 100 million or so, nearing 200 million. In 2020, already over 400 million. They've never sold that much. France seemed to be where they were exiting. And most of these are UK-based retail parks, so what was a retail kingpin really doesn't look that pretty anymore. Directors getting involved, nothing special. Let's see some more. They reduced net debt. But you just because you sell things out doesn't mean... that's ridiculous, paying your debt back. And not really making any progress as a company. Phase 1, that's just carbon stuff. Very amateur presentations. I'll pull this up and show you guys exactly what I'm talking about. Very amateur. Very amateur indeed. Yep, old results, old data, I see. Net rental income, profit, yes, I see. Businesses that still make profits, they did pay a dividend. They had to have, yeah. Okay, 20 cents. If you're in such bad shape as a company, why are you paying dividends? Oh, because they're in the Vanguard ETFs. That makes sense. Okay. What kind of a dividend's that? I think that was on an asset sale, probably. Yeah, so they're just destroying the trend. Any quantitative way of being involved in it. This is a real estate investment trust, I guess. Just not a very strongly performing one. And why would you want to be in retail for this kind of company? In fact, when you could be involved in retail, not retail, social housing. Civitas, I think that's what they're called. This company, I actually have a holding in them in my personal investment portfolio, but they give a dividend of something like, what was it? Yeah, 135. It was up a little bit from before. It was 133, but that's rounded. They would give 135 every quarter. It's about 5.2 pence a year. It's 5.2% yield, well, 5% yield here, given 107. And they've had some decent returns from the recovery post-COVID and even before. Very, very nice recovery. Trend is all healthy. Really, this company in the whole COVID pandemic actually delivered revenue growth and profitability growth, which is really beautiful. For a real estate investment trust, you want a company that will make money regardless of the market, and every year it will make more money. It's not huge, but it's something. And I'm comfortable, as you can see with this. But it's not a fast mover. It's something you hold instead of bank accounts, which are now the biggest waste of your money. But anyways, thank you everybody for coming along. It has been a pleasure. This was just a little excerpt of what we'd normally look at. Normally it's more intense because we'd be trading. I've been away for quite a while, good couple of weeks. I saw Eschep, the Prince of Trading View, with a stream, and I thought I was going to hop on actually, but I watched that first and then came on. But yeah, I hope everybody has a wonderful, wonderful weekend. A long weekend, because the markets in the US are closed on Monday. Why? Because it's President's Day, as far as I'm concerned. From London, England, I've been your host, Ryan Keir of quantiumresearch.co.uk. I'm going to go get through another bowl of Lipton iced tea, cook some food, and continue looking through some ideas. Hopefully, on the next stream, we'll have a nice trade. It's been a pleasure. I'll catch you all soon. Bye.